Okay, Alex, you want to go ahead and get started? Good afternoon, everyone. Welcome to Investing in Innovation, brought to you by the Ohio Innovation and Technology Association, or OITA, and North Coast Ventures, and what we hope to be the first of many in a series of collaborative events between OITA and North Coast. Our goal today and with this series is to bring together investors, business owners, entrepreneurs, professional service providers, deal makers in an effort to convene, connect, and collaborate, and to provide you with the insights and real world experiences of successful technology entrepreneurs and investors. For those of you who don't know me, I'm Nick York, and I'm the president of OITA. And I also happen to be an investor, a business owner, an entrepreneur. So the issues today are all very dear to my heart. Along with me in the co-hosting role is Todd Fetterman. Todd's the managing director of North Coast Ventures. And for those of you who are new to North Coast Ventures, it's a leading technology and innovation investment fund investing in early stage entrepreneurs and connecting them with on-demand access to intellectual capital through their member network with deep links to the corporate community and investors overall, really providing leading to game-changing opportunities for their portfolio companies. Todd's been the managing director since its inception in 2006 and has successfully led the organization to a nationally recognized best-in-class status as the nation's 5th largest angel fund. In addition, today and joining us as panelists are 3 of Ohio's leading innovators and business leaders in the technology industry. Gary Ellis, who's the president and COO of Remesh, Bob Gilbreth, the founder and CEO of Holology and his new venture, Hardy, and Ken Gaverty, the executive vice president for enterprise payments and analytics at Keycorp. I'm not going to spend a lot of time on introductions right now because these guys will give you a little bit about their background and all the success that they've had, and they have been extremely successful. But suffice it to say that you really need to pay attention when these guys talk. I'll guarantee you there'll be something that they say today that's going to be a direct benefit to your business or your endeavors going forward. So we really look forward to hearing from each of them. We're going to kick things off today with Todd giving us an overview of investing in innovation landscape here in Ohio, and then turn to our panelists for a Q&A on what it takes to be successful and how they see the future of the innovation economy and growing and accelerating here in Ohio. There's going to be time for chat or Q&A, so use the chat or Q&A functions. And we prefer this to be as interactive as possible. So ask questions, don't be shy, even the tough ones. We'll try to address everything in the time allotted. And then finally, if you've got thoughts or ideas or suggestions and follow-up, after the event, either for OITA or North Coast, please feel free to reach out to me at any time. I'm happy to make some connections, keep people connected. As I said, the goal is convene, connect, collaborate, and that's the role that I'd like to play. So without further ado, I'm going to turn it over to Todd, who's going to introduce us to North Coast Ventures and how together we might all be a little bit more successful. Todd, take it away.
Thanks, Nick. Appreciate it, and good to be here with everyone. This will be a relatively quick, high-level tour of North Coast, what we think is happening in the state as far as innovation and how we see the opportunities. Super high level, what we're all trying to do is hard. There's a risk-reward trade-off here, which is fairly meaningful. These logos on the left are all companies that we're all familiar with, but thinking about innovation and startups and looking at this kind of subset is a little bit like looking at the 2 teams in the Super Bowl, right? They are the ones that have gotten to the very top, but it ignores how hard it is to get there. And general startup land is more like youth football, high school football, trying to get into college football, let alone the pros. There are a lot of challenges along the way. The competition gets tougher and less people make it through. But part of what motivates all of us in this is to build something great. The fun of putting a great team together and going after a big opportunity. The fun of doing something new that hasn't been done before, and of course, the financial reward of being successful. This is what every projection we've ever seen looks like. This is what 0% of the company's performances look like. So even our very best companies, one that got to 100 million in revenue, missed projections the first 3 years, right? So just know that when we look at an opportunity, or someone experienced in startups looks at an opportunity, this whole vision thing is really important to understand where the company wants to go and where the technology could go, but it isn't necessarily viewed as a roadmap for how to get there. And those are two very different things. The notion of funding really does vary by geography. The valley of death really depends on where you sit to understand kind of where there's a challenge. In reality, it's hard to raise capital in most places. In Ohio, part of the opportunity and the challenge, though, is framed by where we are and what we have access to. So the chart at the right, comes from a E&Y report a couple years ago, and you may note that there's no bubble in Cleveland or Ohio, right? There's a bubble there for the Midwest. So pretty easy to see right away that a relatively small portion of institutional venture capital is going to be deployed here. So we've got to be pretty savvy about how we go after it and bring it in. In Ohio, there's a terrific program, though, under the Ohio Third Frontier. There are several that have benefited the startup community over the years. Some of these funds go to help economic and entrepreneurial support organizations. Some of them go to augment private capital in funds like ours, which ultimately gets deployed into startups. And a subset goes to companies directly. So between Ohio as a state, between Jobs Ohio, we have a meaningfully more robust entrepreneurial support system and resources than most states we've seen. Ohio has a fair number of accelerators, which is where much of the early stage technology gets its first shot. Bob, I know, has been a mentor over the years to the Brandery in Cincinnati. Gary's company went through flash starts in Cleveland and then later Techstars in New York. So that's a pretty important part of the support system. There are thousands of angels in Ohio. These are people who vary in capacity to support these companies, vary in terms of experience, and vary in terms of kind of how engaged they are. But they're all potentially resources for funding. They're angel groups, which is how North Coast got started. So hundreds and hundreds of individuals who banded together to deploy their capital. And then there are some venture capital funds and private equity funds. The largest, as many of you know, is going to be Drive Capital in Columbus. And these venture capital funds really vary from less than $10 million to many hundreds of millions of dollars. But to start a company here in Ohio, I think you really have to be aware of and able to engage with the best of the resources at every step of the way, because there just isn't enough funding to not do it. And then at the risk of stating the obvious, any successful company really in any state is going to bring in capital from the rest of the country and sometimes the rest of the world. The goal is not to say, how do we get Ohio or the Midwest even to fund these companies, right? The best companies could and should raise capital competitively from across the country. As far as how North Coast approaches it, we have a group of several hundred individual investors. These are people who have started companies, people who are technologists, but also physicians, lawyers, and general business people who want to support high growth companies in Ohio. They're willing to risk their own capital. They're willing to put in some time and energy. And for them, they do it because they get a combination of financial return, satisfaction from the activity of building these companies, and a real desire to see these kinds of opportunities in Ohio win. Beyond the individuals, one of our challenges is to engage more broadly the corporate community in the region and across the state. So much of innovation is going to happen under the umbrella of corporations here. Many of these companies have whether innovation groups, venture groups, and other groups that are relevant to us. We really view all of the corporate and institutional groups in the state as potential resources for voice of customer when there are individual startups that are innovating, potentially for early pilot customers and longer term partners. So for those of you on the Zoom who are part of larger entities, just know that what we're talking about is not intended to be exclusively or even primarily startup, right? That the startups really need to partner with and engage with the corporate community. And that can be one of the competitive advantages we have in Ohio if there's more willingness on the part of the corporates to engage with startups here in the region to advance innovation. Certainly won't get into the detail of how we do things at North Coast, but just know that there has to be, for any group that wants to fund innovation, a whole process for sourcing deals, evaluating deals, finding expertise under our umbrella or outside our umbrella with individual investors, with corporate partners, being able to syndicate deals to whole groups, and then ultimately trying to help these companies be successful. It's the type of thing that does not happen on its own. It really does take a village to build and support innovation. And we're hopeful that more and more people will get involved as at some point in the process to try to help startups grow in the state. Startups are really responsible for all of net new jobs in the country over the past 10 years. It's really how innovation happens and how job creation happens. And we'd love to see more of a partnership with small and large companies alike. One of the things that I think will come out of this conversation is just how common sense many of these areas of innovation are and how we evaluate potential opportunities, right? At the highest level, we're looking for big opportunities. Small doesn't do much for us. We're looking for credible solutions. There are lots of people who, would love to be able to turn lead into gold, but if it doesn't work, it just doesn't work. We're looking for something that works at scale. There are a lot of technologies that may work on a lab bench, but not work in the field. Technologies that can be deployed very expensively, but not really in a way that is efficient at scale. It's really all about the team. So we're looking for teams that have the right component, ways that we can build a great business model. Ideally, some kind of IP, although for us, it's rarely patents in the software world. It's usually know-how, relationships, speed to market. And then lastly, return potential. We're looking for opportunities that can drive outside returns, which is why people chase innovation. I mentioned before that it's not just things that happen in Ohio. We try very hard to try to engage groups across the country. I think this number here is actually up to about 75 different VCs and private equity funds that have invested in North Coast companies. We invest primarily in the state, but are also investing in out-of-state startups as well, but almost exclusively in the business-to-business software as a service world. And then, we're trying to create companies of substance. There will be a lot of singles and doubles in the process, right? It's not to say that everything is going to be a grand slam home run, but we're very hopeful to build the kind of substantive companies that can be competitive nationally. And, as you look at these companies from top to bottom, Remesh, ScriptDrop, and Proformex, you can only assemble a team like this by bringing in capital from investors or bringing in revenue from your customers, right? It's the only way to assemble talent and to build talent and maintain talent. So this is the kind of thing we'd like to see more and more of. I won't get into the details of North Coast, but just know, as I mentioned, there are lots of singles and doubles. We're going to get involved in a lot of these ventures, hopefully chasing some pretty big opportunities. But each one of these companies will lead to more innovation. So we've already funded a startup that came out of the OnShift ecosystem. I'm sure at some point soon, and of course, Bob is on his second company here with Be Hardy. So oftentimes, once there is one startup, it's not just one startup, right? It starts a whole series of people and groups trying to build companies. I mentioned this also, so the more you invest in startups, the greater your sense of humility gets over time because of just how hard this activity is. A quick sense here of some of the lumps we've taken. The farther to the right an opportunity is, that each one of these diamonds represents a company in our portfolio. The farther to the right, the closer it is to business SaaS, where we've now ended up as our focus. The farthest to the left, the more it's an invention. So it could be life sciences, devices, therapeutics, advanced materials. Things that are more binary outcomes, probably a little less capital efficient. On the vertical axis is how well we've done. So our exits are at the top. If it's in the bottom, that's where we've lost all of our money. So to state the obvious, most of our success stories have been in B2B SaaS. Most of our failures have been in areas of funding invention. So that's told us what we're good at and what we're not good at. It doesn't mean that other investors and other innovators can't have the inverse experience, but this is part of what's informed our thesis going forward. And we seek to fund companies like these. And this list here of companies in our acceleration fund represents companies from Cleveland, Columbus, and Cincinnati. So with that, I'll stop talking, turn it over to Nick, and let the innovators talk.
That's great, Todd. Thanks a lot. Appreciate that overview. Obviously, you're a guy who's at the intersection of all of this and has a great view into that. And so we'll have some questions for you as well. So stay tuned. So what I'd like to do is with the group, as I said, I think each of these guys can probably give themselves a better introduction in terms of who they are and what they've done as it relates to innovation, as it relates to technology, as it relates to investment. So what I thought I'd do is just give a chance to get that and give a very brief sort of high level overview of what you do. And then we'll get into some of the nitty gritty or some of the questions. So I'm going to start with Bob. And Bob, if you could just give us a little bit of a story, on the Holology story, and then we'll talk about your new venture in a second. But talk about that. You're somebody who's gone from start it to run it, to grow it, to exit it, all of that. So you've got a great perspective on that. But give us a little background on Holology and how you got to where you are.
Sure. Thanks, Nick. Great to be here. Yeah, you left out, you had the start and the finish and all that. You missed all the negative hard parts in the middle there. But that's kind of the theme. We started Holology back in 2012, and the vision, the opportunity we saw at a big picture was that the world of marketing is changing due to digital. It's hard to interrupt people with an annoying ad. It was getting harder, and we saw an opportunity of actually helping enable a world where the marketing adds value. It's something that people want to see. So that was kind of a thesis we were looking for, an opportunity to build a business around. And we saw an opportunity with the social platform Pinterest, which was rising at the time. We said, hey, this is a platform that's all about great ideas, inspiration, the marketing can be useful. If this follows what other social platforms have done, they're going to create an ecosystem. We could be a great part of that, and we'll win together. So we launched, raised some money, including from North Coast, built our team, built our product. And our first couple of years we had some big brands that piloted with us, but our first few years was a struggle. Anytime you're building on someone else's platform, it's a challenge. Pinterest was kind of slow to move, not as helpful as we would have hoped they could be. And we had a real kind of crisis where we were running out of money. My co-founder left. We were kind of starting to pick up the pieces, and it led to us saying, "All right, we've got to control our own destiny here. We've got to get profitable, not have to be relying on the next round of funding, and we need to get off someone else's platform and build a product that we can just sell." That led to us kind of shrinking our team down. But it was a real opportunity in the crisis because the people who stayed were the true believers. And we made it the company mission. We said, okay, we've got, X number of months to go before we run out of money. We need to figure it out. And it became everyone's job, to kind of almost be a founder again. And it led us to try some different things. And eventually we kind of fell into doing an influencer marketing campaign, and found that we could take 80% of what was great about our Pinterest business and turn it to this new growing area of influencer marketing. And in fact, do it in a way that was superior to the competition at the time. So that bet worked. We pivoted, classic there, ended up doubling sales, got profitable, and a couple of years later had multiple offers from companies that are very large in the space, kind of working with the same companies we were. And they said, hey, look, they were both like, hey, we'd love to have you part. We'll scale up. We ended up taking an offer with Quotient Technology, a company that started off as the first digital coupon years ago in Mountain View, and signed up with them. Had a 1.5-year earnout. So kind of the total size of that acquisition was up to $50 million. And we ended up hitting it. 3 months early. We maxed it out. And then it was March last year where we got our checks and took the whole team to Cancun like the week before COVID locked everything down.
Just in time. Yeah.
I still feel like the luckiest guy on the planet for all that.
Right, right. Well, that's terrific, and what a great. There's so many things in there that we'll unpack a little bit as we go through here. But I noted down, never let a good crisis go to waste, right? So you took it and did something great with it. Gary, let's turn and talk about Remesh a little bit. Talking about sort of, the next generation in marketing and connecting with customers and what that means for companies. Obviously, you guys are in the forefront of a lot of that as well. So tell us a little bit about Remesh, Gary.
Awesome. Thanks, Nick. Thanks, Todd. I appreciate the opportunity to be here with you and the rest of the panelists today. So I started out as a political operator way back in 2010. And it was really the 2012 senatorial campaign here in Ohio that I identified a problem that resonated with me. It was something that I wanted to solve. And that was, it's super easy for, in this particular case, candidates to project out, right? They can get on traditional media, they can get on social media, but a good politician, a good candidate should actually be doing the opposite in many ways, right? They should be creating a virtual table that they can get their constituents around and understanding them. After all, politicians are supposed to work for us. And the fact that the inverse was really how the world worked was somewhat mind-boggling to me. And I had this existential moment coming out of the 2012 campaign going, do I stay in politics? Do I try to solve this internally? Or do I look at, in another direction? And I got really lucky. I met over that summer my co-founder, who timing and luck are two really, really important components of startups. And I've gotten lucky more times than I can count. And I'm appreciative for every single time that's happened. But I got introduced to Andrew Konya. He was getting his PhD in computational and theoretical physics at Kent State. It's really important if you're going to start a startup that's in the tech space to have people like that around the table, because that's not me. And he was infatuated with the idea of how do you understand populations at scale. And those two ideas really merged together in many ways to create the premise behind Remesh, which is that there's a lot of decisions that are constantly being made across all kinds of organizations, private, public, and many more. And a lot of those decisions aren't that great. And by bringing decision makers together with the audiences that matter most to them and empowering those decision makers to have real, true live conversations that empower, engage, and allow for understanding of those audiences, we can improve decision making and therefore outcomes and ROI. So that is what we set out to build, and we moved to New York together, and maybe we can get into that a little bit later in terms of why we decided to make that somewhat blasphemous decision to leave our homes in Ohio. But what we built was a web-based application that allows a single person to have what feels like a one-on-one conversation, but instead it's one-to-many with our tech, which is principally machine learning and natural language processing, really facilitating that conversation. I will always think of Remesh as a communication tool, but the exhaust is really powerful, actionable feedback.
Right. Yeah. Well, thank you. And we'll get into that, and we'll get into how you can bottle up timing and luck and package that next, because I think everybody needs a little bit of that. So those are great points. All right, Ken, we're gonna turn to you now. And you come from Keycorp, right? So the big company. You're not the small startup, but obviously within that realm, there's a lot of different divisions and focus areas, and you use a lot of this technology. So as head of enterprise payments and analytics at Key, how do you think about the utilization of technology? How do you work with startups? How do you identify what real innovation is, and how does that get implemented then in a more of a behemoth like Key?
Yeah, great. Well, first off, thanks for having me as part of the panel. I think it's so incredibly important for us to regionally start to make these connections between the investment community, the startups, and corporate. I've been part of this community for about 7-8 years now. And when I've seen the corporations and the startups come together, I think it's really powerful. I don't think we probably do as much as we need to. I see a lot of kindling of it around, but I think it's a huge opportunity for us. I would say personally, the story behind how did I get involved in the tech community is really how I ended up in the payments job. So my background is much more of a strategy, merger and acquisition consulting background. That's what I did for the majority of my career. And then I came to KeyBank in that capacity. And so I was running strategy for the business half of Key. And Chris Gorman, who's our CEO now, was the president of the business side. And he said, hey, there's an area where we need you to do a diagnostic, and it's this payments part of our business. Generally, for most banks, is a pretty good earnings contributor. For us, it's only been okay. Hey, just tell me what's going on in the industry. And just coming from more of that strategy background was a bit more of an outside-in view. So I spent my time saying, okay, I'm pretty sure I know what we have here, but what's happening in the outside world? FinTech in 2012 and 2013 was really just starting to see its initial inflection point in financial services. So I spent a lot of time with venture capital groups initially saying, okay, what's your investment thesis? Why do you think these small companies are going to take down the banks? And it was just really educational to really get immersed in the thinking of, here are the things that you're not doing today. And to summarize it, we can get into some of this detail later. There's really just much more of this software and workflow mindset. So we, as a bank, we had a bunch of payment capabilities. We can send money from place A to B. We can send anywhere you want to go, but we didn't have any context for why are you sending it there? What are the rest of the pain points that occur in that process? And we saw the fintechs getting just laser focused on, well, why are you trying to send that payment there? And if it's a business, what's the most important thing to you? Is it really that it travels, instantaneously, or is it more that you have the right reporting and the approvals and the visibility or confirmation of delivery and that goods were delivered? So there are all of these elements in workflow that I started to think about that clearly inside Key, we just weren't thinking about that yet. And so that led to a really robust fintech program that we've developed over time. We made a ton of mistakes, no different than what Bob was talking about earlier. Partnering with a fintech is hard for a corporate. There's a lot of inertia in how corporates do business, and trying to open up that apparatus and work with a 10 or 30 person company is really hard. So we started to say, look, there are some things that we are not the best builder of, but we see some great solutions out in the marketplace. We know that we've got customers that need these capabilities. So how do we start to build some of these partnerships to build capabilities together, deliver them together? And now, we're 9 partnerships in. I invested directly in capital into 6 of those companies. They've all been fruitful. So knock on wood, in the sense that I think we go through our diligence, and I'm happy to tell you what I look for in these companies, but it's a big part of our business. And then the second half of what I do, the shortest version, as head of analytics, which supports all of Key. So from the consumer side all the way through to multinational businesses, this really is the neural engine of Key. And I think, like a lot of corporations, we are lucky that we have access to an extraordinary amount of data. We get called by Apple and Google and others who can't wait to have access to this data. But as a bank, I think, no different than a lot in the industry, we weren't great at accessing it. It's in a lot of different legacy systems. It isn't well connected. It wasn't attached well to use cases. And so, what we've really tried to energize over the last couple of years is, how do we pick a couple of places where we can start using data much more like a fintech to personalize experiences, underwrite our customers better, and be much more proactive in how we think about identifying their needs and getting ahead of even our customer asking for those capabilities.
Right.
So I'll stop there.
Yeah, no, thank you. That's great. And I want to unpack that a little bit on how, companies connect with you. You said you're, 9 for 9, I guess. So your batting average is terrific. So you must do, really focus on the diligence, but so that lends itself to the questions, and we'll get into it, of, what companies have to do to be prepared to have a partnership like that with you guys. So I appreciate that perspective. So Bob, I'm going to go back to you. You come back from Cancun. You said you got somewhere in $50 million range. You're the luckiest guy in the world, and you decide to go back in to a startup again. So what prompted you? What lessons did you learn? What's better about this time than last time, as you think about bringing innovation into the marketplace, another time?
Yeah. Luckily, we were on a great pace toward our earnout. So I had several months before we were done to do a lot of soul searching. And, I think a couple things pulled me back in. One is that I've realized, being an entrepreneur for 20 years or something, I'm not great having a boss. It's just the way it is. So that's the first thing. But really, it was more about the building process is incredibly fun. It was a couple of our other Holology leaders, the three of us said, let's go do something together. We kind of cover the major bases between us and with technology and operations and finance. And we just got together and said, hey, we want to do this again, you know, and kind of our brief was, let's go for something really big. You know, we've got some money in the bank. We can go without a salary for a while. Let's take a big swing. And then let's do something that we're just really passionate about. And that led us to come back and say what we loved about building our businesses was the people element and building a great culture. And I think it's really everything in business now. It's you build a great team, you can do anything. It almost doesn't matter what category, what business it is. And yet we also saw how most companies struggle to build great teams. So that became our focus. Let's build a company that helps bring in some things we've learned, can scale a positive impact on the world. And as we thought about building a company about building better teams, we went down the rabbit hole and looked at something that had been a key to our success was just going very heavily into our networks, finding not just, hey, who do you know, like really going deep, who's the best spotter of talent, you know, what's the company that shut down, how can we grab the best people immediately, even if we don't have jobs for them right away, we'll figure it out. And that kind of led us into seeing it fits where the talent world is going now. You can't just wait for people to apply. You've got to go find them. Mm-hmm. And yet it's very difficult. You know, if you look at that, we've all had that question of, I need to find a great X. What do? Do you text? Do you email? Do you LinkedIn? Wait for people to respond? You know, you get a handful of names maybe. And the only technology is LinkedIn, which increasingly is pursuing a world of let's connect everybody, whether you know each other or not, right, and sell ads in your feed. And that can be very useful, but what we're missing is the true relationships. And so what we've created with Hardy is kind of a new way to just almost get back to basics and make it more efficient to share the great people that you would recommend and love working with. So our concept is we have what we call leaderboards, which are crowdsourced lists of people with a certain skill, interest, or expertise. So we've got like 230 of them right now. You can go on and find, you know, leaderboards of project managers, people who are recommending project managers they've worked with, and you can just go find them and see recommendations, which are a lot stronger connections than a LinkedIn connection, for example. We've got angel investors, we've got Midwest VCs, we've got top innovators, corporate development people, things that you can't even find a skill for on LinkedIn. We've already got it, and it's peers building these lists together. So we're really early. You know, our kind of concentration so far in building this marketplace is around Cincinnati, but people are enjoying it. I think it fits very well with where the world is going now, which is a positive, let's help each other, let's pay it forward type of mentality. And we've got thousands of people on, you know, we're just a month or two away from our official launch. People are finding jobs, people are finding peers that are networking in ways they couldn't before. And so we're pretty excited.
Yeah, that's terrific. That's terrific. And I agree. I think that, you know, where the world is going is a big question in innovation, right? And you guys are at the forefront of thinking about that and are fortunate to be in the position to do that with a company and kind of, you know, make your way. But I think those are the building blocks of something great. So I'm sure you'll be doing it again in Cancun in a few years down the road, but we'll see. So Gary, you talked before about New York. You gave us the you know, the teaser there of the move to New York, and so you obviously had tremendous success and growth over the last, you know, 4 years or so, right? And what do you think the keys to that? You know, again, you've got a pretty innovative product. It's not something that, you know, everybody intuitively knows how to use or can just kind of put in place. It's not you know, you got to figure out how to do it best, I think, from what I understand. So what do you attribute your growth to? Is it that move to New York, or are there a number of factors?
I think there's a number of factors, and at different phases of our life cycle, we've had to make different decisions and to lean into different directions and trends. And I would start out by saying, I don't think there's one size fits all for how to map out the right path to a successful startup. And I would follow that up by saying, I'm not convinced I'm a successful startup yet. It's great to be in the top quartile of Todd's charts, but I'm far from feeling like I've accomplished what I've set out to do. And kind of the eyes forward is something that I do think is probably particularly helpful across all of the kind of the phases. We certainly had a bold idea and a lot of grit and determination at the beginning to get it off the ground. I didn't start working full-time on Remesh between 2012 and 2015. I only joined full-time when we moved to New York and went through Techstars. And a lot of that was, I would be not a burden on the company, but there wasn't a product, and the core technology had to be built first. And I think that's something that I've seen companies overlook, which is if you're a technology company, you have to invest in the technology first. It's super important to get that off the ground and be really sole focused there. The move to New York was in large part driven by the challenges that I thought we would have raising capital and finding talent in Cleveland at the time. And I mean, zero disrespect to Cleveland. We had always thought we would come back here, and I'm reporting live from Solon, Ohio, and I'm glad to be back. And we're planning on shifting our global headquarters here on the other side of COVID. We had to get kind of off the ground, and we saw an easier path on the coasts than in Ohio. And we've burned a lot of capital thanks to a lot of funders who believed in us. I'm a first-time founder. I've made plenty of mistakes along the way. I think learning from them is key. Bringing in people who have been through the game before, who you can trust, and leaning into their knowledge, their expertise, and being willing to grow with them. I think what Bob just said was so spot on. It's all about the people, and you got to take that bold idea, that funding, and you got to build a world-class team around you. You've got to have the right culture that empowers them to be the best at what they do. And I don't know, I've got a bunch of different departments underneath me. All of the people who lead those departments are better at that function than I am, and I've got to challenge them with some strategic stuff. We got to get alignment on a plan, and then I've got to resource them and get out of their way and let them do what they do best. At the end of the day, what that resulted in was unique, powerful technology that has like truly differentiated value. Ken is right. There's so much data out there, and most organizations have a really hard time amalgamating it, dealing with it, making it useful, turning their data lakes into something that is valuable. We've gone after a slightly different type of data, something that's custom primary, that's generated in real time, that's designed to answer specific questions that you're asking in the moment. We do that with unstructured text, which is super, super hard to deal with. So we've got something that the market needs that hadn't been solved before. And we've seen a lot of acceleration through the last year with COVID, with remote workforces, with trying to understand how employees are dealing with new situations, how customer behaviors are changing. It's really, it's grueling, it's hard, but it's super fun and energizing. I think it's a blend of grit, skill, timing, and luck. And I think part of what has made us successful thus far is we've never been happy with where we are or what we've done. We're always looking forward and trying to get to that next level. Hopefully that all leads to a good outcome in the end.
Yeah. Well, that entrepreneurial problem solver, right? I mean, I think that's what the key is. Sometimes businesses or business people go looking for a problem to solve and have a product that's not necessarily a problem, but when there is a problem, that's when you have your biggest and best opportunities. Even though it's hard, you're making your way. So Todd, let's go back to you for a second. Obviously Bob and Gary talk about sort of, these new fresh ideas and and kind of startup and in the future, right? When you think about from an angel investor standpoint or from the VC standpoint, is that sort of the focus, that next big thing always, or is there opportunity for the companies who are just doing something better, or maybe something that's more related to what Ken was talking about, kind of some core functions at Key, but just improving that process in some way? Talk about a little bit how you think about making those type of investments in companies, whether it's the unicorn and the big idea that no one's thought of, or it's the unicorn that's from something simply from making things better as they are, better widget, so to speak.
Yeah, I'd say the ideas we're looking for and the ideas most venture capital funds are looking for are big ideas by definition. And although all VCs are different, right? There's some that are $10 million funds, they're $1 billion funds. There's some that focus on software, some that focus on life science, some that do early stage, some that do late stage. The commonality though is it's got to be something that's a lot better than exists today. So I think the opportunity can be smaller or it can be vertical, but it can't be incremental in terms of value, because no one really cares, right? If it's just incrementally better, you're probably not going to be able to attract a team that's really good enough and motivated enough at building something. And you're probably not going to get the attention of a customer. I doubt that any of those deals that Ken partnered with were 10% better than what he was doing before, right? If they were 10% better or 20% better, it probably would not have been worth even looking at it, let alone going through, a real partnership or in some cases an M&A process. So there's a meaningful risk reward trade-off. And as investors, just for the investor model to work, to compensate for the risk that we take and the failures that we know we'll see in parts of our portfolio, there has to be a really substantive upside. So typically, looking for industries that are or will be billion-dollar industries that are growing, that are attractive, where the opportunity is enough that there can be venture scale and venture profitability. Gary mentioned burning dollars. We don't like to use burning and dollars right next to each other in a sentence, but it does take a lot of money to fund these initiatives, and usually the opportunity has to be big enough just to justify that model. So as we go through our initial assessment or we go through a substantive diligence process, one of those common sense questions we're asking is just how much better is this? And I would say about half the time when we say no to an opportunity or it fails in diligence, it fails because the opportunity isn't big enough or the problem that the company is solving, right? The solution they're bringing to market is just not a meaningful enough improvement over what exists today to justify the investment and justify the model from our perspective.
Mm-hmm. Yeah, that's great. Well, and I think looking at that of what's the big picture, what's the opportunity, right? And one of the things I'd like to kind of talk to all of you about now is this notion. I'm going to start with you, Ken, but this notion of kind of partnering into a larger organization, right? Sort of the startup and the relationship with that corporate partner, whether that's a strategic partnership, whether that's an investment, whether that's just selling into the organization. Ken, when you look at sort of the startups and the technologies, and you mentioned, you said 9 of them, what were the things that you kind of look for and kind of insist on in order to, give it the time of day, I guess? That means kind of to Todd's point. Talk a little bit about how you, in your position, think about working with a smaller company with a great idea or a great new technology.
Yeah, sure. So just to give you a sense of the funnel, we probably looked at around 400 to 500 to get to those 9. So it is, on an every week basis, I will get the unsolicited sort of bot emails. I get the intro from somebody who knows me well, who, 2 degrees of separation, that person has just gotten seed capital funding. So it gets to me in every way possible. And it's really hard to differentiate these. So, you put a model together that we've been using now for the last couple of years to say, first up for Key, what we start with is what customer problem do you solve? I don't play as early in the game as Todd does. So I'm not incubating ideas, right? I had a number of people approach me to say, look at all this blockchain talent that I have. What can I solve for you? Well, that's not an interesting question for me. You haven't solved a customer problem yet. So when you can look at my customer base, whether it's a consumer, whether it's a small business or a large company, what need have you identified? And if you listen to so far how Gary and Bob have talked about the need that they've solved, it's very narrow, which is where the world is going. The world is getting hyper verticalized by industry or by use case. And so you have to really demonstrate that you understand that customer pain point incredibly well. And then you've got to be able to demonstrate that you've built the right solution. The right solution might be software alone, but rarely is it software alone. Most of the time it's software plus some services wrapper. because it can't live by itself, right? And I think a lot of the early companies that back in 2012 and 13 and 14 that we had were much more software companies, but they didn't understand how to build a channel partnership, how to work with a bank, or how to deliver all the wraparound services that a business customer might need as we actually deliver it into the marketplace. So, it starts with what customer problem have you solved? Then I move from there into what you've heard a lot of from all the other panelists, which is quality of the management team. And I would put this at, maybe to dimensionalize this a little bit, I'd take the third best solution to solve a problem with a great management team more than I care about the best software solution or the best mousetrap in the marketplace. So good enough solution that really still has that 10x value to the customer, but it's got to be with a management team that has the experience to understand a couple of critical things. First is, what are you not good at today? Like, do you understand what your blinders are and what you don't do well, and have you identified it? Two is, have you built a management team that can scale? Or do you have a management team for the size that you are now? And that becomes a problem. So if you don't understand, if you don't have managers that understand what it's like to go from a $5 million company to a $50 million company to potentially a $500 million company, then there are going to be fracture points along the way. And so those are things that I'm looking for. And it doesn't mean that they have to have it now. It means they need to know that they need it, and that's part of the game plan. And then the last thing for me in that lineup is we've got to align on the strategic roadmap forward. So we may align on the solution as it exists today, but it's incredibly important for me to have, particularly with the CEO and the board, alignment on where is your focus? Like, where are you taking this product or capability next? So we don't find ourselves at agreement now, but in 12 months from now, as the evolution of the product goes down the path where the CEO wanted to take it, maybe that doesn't match up where I thought the world was going. And so now you've got tension in the relationship that's just hard to reconcile at that point. These are all knowable, discoverable things. Maybe the last underpinning that I would put to all of this is there's no relationship where at the outset you can codify it in the agreement. Whatever commercial partnership we put together, there are going to be a series of problems that we did not think through. And so that's where the relationship and really getting to know each other and how you solve problems as an organization, we're going to have to deal with problems outside the contract that need to probably make its way back into the contract at some point. But really start with, we need to solve this problem in real time with the intent and the spirit of what we set out to do together. And let's just get to the right answer. And that's been crucial in picking my partners.
Right. Yeah, that's great. I think that the working through it process and the relationship is, critical. It all comes down to people at a lot of levels, right? And you said that you take a management team over the solution itself. And I think that's an important point that a lot of times it gets overlooked. People think they have the best mousetrap, but people really do matter. I think that's a point that you hear from a lot of good business leaders. So Gary, talk a little bit about from Remesh's perspective. You're obviously with a number of large organizations and kind of have that as, in a variety of types of businesses, right? You mentioned everything from politics to sort of big corporate interest. How do you go about sort of, introducing this innovative idea into a large organization? What's your experience taught you?
Yeah, you probably saw me nodding along to pretty much everything that Ken said. And it's interesting to see his perspective from the other side of the table, because everything that he's saying is what I'm looking for, but the other side of the coin, right? And for me, it's the first thing that matters most is having alignment on the problem that we're trying to solve. It's a real problem for you. You've got dedicated resources to solve it. To Ken's other point, we think of ourselves almost as an AI agency, right? Our technology is good, but you need people, and you need people on both sides. That takes dedicated resources from us. And I have a well-staffed customer support team and internal research support as well that is there to service the client as much as possible. But I also need a champion on the other side who is going to be investing resources, not just here's a contract, hope it works, because that's not going to work. And we very much buy into the land and expand model, which is let's bite off a real problem that we have, something that is tangible that you need to solve today. Let's nail it. Let's figure out how that, what is adjacent to that allows us to grow. We should prove our worth to you. And the biggest contracts that we have are, the champions have been promoted 2-3 times under Remesh, and now, they're SVPs, and one of our champions is a C-level, and he started out as a director. And that's really how we've won in many ways. And I think our net dollar retention is almost off the charts good. When we tell people, they're like, what? That's insane. And it's because we invest early in the relationship. We make sure we've got a unified vision, and then we spend heavily at the beginning to make sure that we can deliver on what we say. And we're okay with ROI on relationships taking a while, because it's only once you're really at scale that you're going to truly see kind of the fruits of those investments. So I think everything that Ken was saying was really resonating with me.
Yeah. Thanks. So Bob, just kind of build on that point a little bit. You're at that stage now with Hardy. It's kind of new, right? And you said you're not quite to the sort of the full launch, but you want to have that relationship for companies and helping them build those networks and connecting people. So how do you do that at this stage when you're a known commodity in the sense of you've been a successful entrepreneur, but your product or your service or what you're doing next is not? How do you start that conversation? When do you take the step towards engaging with some of those larger customers or users?
Yeah, we're doing something a little bit different this time. And I think some of it is the nature of, if you're trying to sell into B2B, and these are from our early customer discussions, it's a bear. I mean, it's if you're kind of following the traditional path, it could take a year to get a pilot off the ground. And so in our case, we said, we're going to be DOA if we kind of do that style. And they're going to want every bell and whistle and everything else if it's that top-down mentality. So instead, what we've been doing is offering something that has a lot of value for free, and we're allowing large companies, startup founders to use and get value from our system. And so we've got recruiters at Kroger they have a problem. They have to find a data scientist, and they're not coming through the application portal. And by the way, no one's coming through the application portal in the future. And so we've got a service. We know her. She's on and finding talent. And we're learning. We're being able to show that there's value happening. Where she's given us notes on her product, and that didn't take a giant pilot. That didn't take rounds of approvals and everything else. It's just having a system that someone can use. I think that's that bottom up model is what's happening in a lot of B2B markets now, where somebody can pull out their credit card. If somebody can get value automatically, then they're coming in and kind of forcing it through with real case studies of success versus, let's put this in an 18-month timeline to maybe get rolled out and pushed to the people below. Yeah.
Thank you. You know what? We're getting a little bit short of time, so I want to ask a question that's in the chat here. It's from Alex Michaels, and I'll just read it so you guys can get it. And the others can listen in. So Prelude to Cinema just completed a crowdfunding campaign for a social network and sales platform to help artists hit hard by the pandemic gain fans and revenue. They were supported by Jumpstart, Bernie Moreno, and others in the community. And they'd like to know how to reach out to others in the community to help support artists so they can contribute to the economy here as things start to open up. So I think that that's a specific question to that business, but talk about how that ecosystem of connectivity works, how it's worked for you. What are the things that you did that were successful? Todd, what role do you guys play? I know you play a tremendous role in connecting people, even if it's not an investment that you're ultimately going to make. So I'll open that up. Todd, you might want to start and give a perspective, but then others, if you've got some view into that, it'd be helpful.
Yeah, I'll just say there's a lot of power in the entrepreneurial ecosystem. So many people are inclined to listen and to try to be helpful, even when there's nothing in it for them. But I think that's kind of where it starts, is being able to promote the vision, talk to people who are able to understand and retell the story. And, in 2020 and 2021, to use the virtual environment as much as the physical environment, because unfortunately, there just are not as many opportunities to engage. There isn't that serendipity of events and people and places, and it has to be more deliberate. But I know in the major cities in Cleveland, there are entrepreneurial communities on all of the various platforms and in ways to get that out there. And I think people have a soft spot for trying to be helpful where they can. And entrepreneurs can and should promote themselves and try to have others support them.
Bob, Ken, or Gary, you got a comment to any of that?
I mean, I throw in just, what I like about this concept is that there's definitely a trend around community. People want it. They're looking for ways to belong. I mean, people are trying to create community into B2B software. I don't know how successful that is, but if you have something that has a natural group that is drawn to it, already you're one step ahead of the game. I think, kind of, we've been following some of the things that this question is about. And at the end of the day, you just got to do a lot of personal outreach and a lot of stuff that doesn't scale. I mean, I'm making a lot of friends. I'm on LinkedIn, meeting people, connecting people. There's a lot of just creating the community by just sheer will. They're not going to just come to you. You've got to go get wherever they are.
Yeah. Definitely echo the sentiments from both Todd and Bob. We Techstars, which was the accelerator I went through in New York, has a give first as their motto. And that's something that I really internalized, and it comes around. The other thing that I think is super important here, and it's a fundamental way that I think about running a business, is as a portfolio of experiments. You don't know, there's no silver bullet. What channel works for you isn't necessarily going to work for me, and vice versa. Get out there, try a bunch of stuff, and then invest in what works and divest from what doesn't. Right? There's no good answer to these questions other than start trying and work hard. Right?
Yeah. No substitute for hard work. Right? So Ken, any thought on that as we're getting close to the end here?
Yeah, I just echo what everybody else said. I think networking is sometimes something that we just assumes happens, or we episodically do it. I think you have to be really focused on networking, and through all the various types of channels you had, exactly the way Gary said. I have the VC community that I very intentionally keep up with every quarter. I make sure I'm talking to the same people to see how they're changing their investment thesis. What are they looking at now? What are they doing? The same set of entrepreneurs that maybe have exited companies. What are they up to now? What teams are they building next? What problem do they want to solve? I don't know where these conversations are going to go, and I probably had more useless conversations than good ones, but you only have to have those once, right? And you realize, okay, this isn't a pathway where we can mutually help each other, so I'm going to head down this one. But ultimately, over time, that's how you create a collection of people in various stages of the community that can be both helpful to you and that you can help.
Yeah. Thank you. Well, listen, everyone, it's 3:00. We promised everybody 2 to 3. I could talk about this stuff all day. You guys gave, as I said, I knew coming in that this would be I got so many notes and good ideas and thoughts to follow up. So I really appreciate all of your time, your interest, your continued participation in growing the innovation and technology ecosystem, whether it's Northeast Ohio, Southwest Ohio, all of Ohio, the Midwest, the country, et cetera. I think it's important. And I'm confident that our participants got a lot out of today, and we look forward to doing more with you and showcasing your companies and what you're doing in innovation and technology. So Todd, thanks again for helping co-sponsor and support this, and thank everyone for their time and energy. And if you've got questions or follow-up, you need the slides, you need additional information, we can make that all available to you. Just reach out and connect with me, and I'll make sure you get it. With that, thank you. Have a great afternoon, and everyone try to enjoy this summer.
Thanks, guys.
Okay. Thank you all.